special segment for this afternoon, Value Plus. Nigel is here to focus on the entire steel sector and what he's tracking there.
Well, that's right. Let's update you on how the steel sector dynamics are shaping up. And let's start with the dominant force, which is China. Now, in August, the Chinese steel exports, they surprised negatively. They rose by 21% on a month-to-month basis. And the monthly run rate of exports have been rising consistently over the last few years. That's primarily due to the weak domestic demand as a result of the declining property market. Now, this puts Chinese steel exports on course to hit 100 million tons in 2024. Now, that was last seen all the way back in 2016. Chinese steel prices as well have dropped to an 8-year low, and they're down close to around 15% from the first quarter FY25 average. That in turn is putting pressure on global steel prices as well. Now, in addition to that, let's focus on the raw material cost. Iron ore prices have slipped to $90 per ton. That's the first time since 2022. And the worry is iron ore inventory as Chinese ports have moved up. And now they're 30% above the average inventory levels in the same period last year. Now, weak Chinese prices, falling iron ore cost, well, they have put Indian steel prices at risk, as the domestic HRC prices have corrected by roughly around 4,500 rupees per ton in comparison to the first quarter average. The problem is that domestic steel prices are still at a 6,000 to 6,500 rupee premium in comparison to landed imported steel. Additionally, India continues to be a net importer of steel with approximately 413,000 tons of net imports in the last month or so. There are lots of negatives stacked up for the steel sector, but as we have seen in the past, the sector turns around when the street gets over-pessimistic. So is that time round the corner? Time will tell.
Is that time around the corner? Time will tell, Nigel. Thank you so much for that point well made. When there is so much pessimism, perhaps, you've been tracking it for a very long time to know that, the timing is always on the obverse side when there are so many pessimistic views.
Yeah, Mangalam, just a couple of more points. The thing is that at one particular point of time, the Chinese steel prices will have to stop falling. Why is that? Because beyond a particular level, they don't want to make that kind of losses. Yes. You'll want to stop the bleed at some point of time. From an India market perspective, what is negative is that iron ore prices are dipping. When iron ore prices are firm or they move up, actually India is at a bit of it's a positive for us, because Indian iron ore availability is good, and Indian iron ore pricing as well is at a discount in comparison to global. So this falling iron ore prices is something that should stop first. Then we can expect a rebound because the raw material cost will benefit on the coking coal cost side, because that has fallen. But all of that is important. So just want to make that point as well.
All right, take that point. Thank you, Nigel, for putting the spotlight on the steel sector, and the iron ore prices, something that we'll be tracking very closely. Take a short break, come back on the other side. Pritesh Mehta joins in with some trading strategies.